Good afternoon, students. Good afternoon, everyone.
Good afternoon, ma'am.
Good afternoon.
Good afternoon. So I welcome you all to the workshop again. I am Ms. Karishma Gulyani, and in the last workshop session, we completed income under the head salary and house property. And in today's session, we are going to go by income under the head business and profession, income under the head capital gains, and income from other sources. I'll quickly share my screen so that you are all able to view. Are you all able to view my screen? Is it visible to
Yes,
you?
ma'am.
Okay, so let's begin. So we are going to first begin with income from business or profession, and we'll one by one first get to know the meaning of business and the meaning of profession. So first, we are going to talk about features of business. What qualifies for a business? So it says that it is the regularity of transactions or continuity of the activities, or there should be an objective of earning profit. The motive behind the business has to be profit, then only it is called business. Otherwise it is more like a charity. Apart from that, they say that application of labor and skill should be involved. It is not necessary that you are going for labor only. In today's time, you're making use of skill also. Like, for example, you guys are also going to, take up add-on courses and take up certifications, and then you're going to go for corporates, and they are going to see how well you are performing with that, and then they are going to recruit you. So it is the application of labor and skill, because what happens is whoever is employing you or whatever the company is doing, actually the whoever is your recruiter, for them it is a business. For us, for people like you or me who are going to corporate or who's going for giving their services, for us it is a service giving, but for them it is more of a business. Now we see that business rendering services to others, even if you're rendering services to others, then also it is business only. Then you have business cannot be carried on with oneself. Yes, that is most true, because if you do it all by yourself, how are you going to earn? You need people who are going to be involved. You need people who are going to supply you with raw materials. You need people whom you're going to give that raw material, from where you're going to transform all your raw material into your finished products, and then you're able to supply those products in order to for people to buy those products, and then you're going to earn profit from that. Next, what all is included in business? So in any business, we have trade, we have commerce, any manufacture that is happening, or any concern which is of the nature of trade or commerce. All of these are going to be included in business. Then talks about profession. So profession means an occupation requiring specialized knowledge and skill. So it could be you could be a doctor, engineer, lawyer, auditor, basically the basic set of skills that are required in order to recruit you. So these type of people, they have a separate and specialized course to attain professional knowledge, and that is what we know already. Now we are coming to some key points that we need to note. One is that it should be carried on by assessee. I hope you all know the meaning of assessee, since it was discussed in the first lecture in this workshop. And it should be carried on during the previous year, not the assessment year, but the previous year. Only profit of the previous year are to be taxed. So since we are looking at the previous year, so only that year profits, they have to be taxed. Income is going to include negative income also, that is loss. See, for a business, they have profit or losses, but for individuals, we don't see it as profits or losses. We have our salaries. Okay, if we are into service. Now, for them, since the losses are also included, therefore income will form a part of this. Then we have relevance of this method in accounting is that there are two basic methods of accounting, if you all know about it. One is the cash basis of accounting, other is mercantile basis. So mercantile is nothing but accrual basis of accounting. It is when what does this mean is that the record is kept when the transactions are entered into, and not when cash or the money is changing hands. That is the meaning of our mercantile or accrual system, and cash is when the moment you get the cash, you receive it, you put the entry, you pay the cash, you put the entry. So also one more important point here is that we classify businesses as legal and illegal, but in case from taxation perspective, there is nothing like legal, illegal. Even if you're having business from illegal sources, you are having income, you have to pay taxes. Then the choice of method of accounting, like I said, cash and accrual basis, you have to choose, the company or the business has to choose. And once it is selected, it has to be adopted consistently. And you cannot keep changing it again and again. So there are few incomes which shall be chargeable to income tax under the head PGBP, which we call as profits and gains of business and profession. So the profits of business, any profession, this is the first one. Then income which you are deriving by any trade or professional or any similar nature association specified services which are performed. Then value of any benefit or perquisites, whether you are converting it into money or not, you have to show it. Then any interest or salary, bonus, commission, or remuneration which is due or received by a partner from a firm. Because for a partner also, if you are receiving all these things, then it is counted as your income. So you have to show it. In case of, see, there is a difference between partnership and limited liability partnership. In case of partnership, there is no separate legal entity that is formed. But in case of limited liability partnership, separate legal entity is formed. And when separate legal entity is only formed, then the business is said to be a separate. Okay, it is a different business activity, but here the partners are the same. So any salary, bonus, commission that they are deriving from this, they have to show it. Okay, any sum which is received for not carrying out any activity in relation to any business or not to share any know-how patent, that is also to be shown. Income from speculative transaction. Speculation is what? That you are seeing that how much you are able to benefit. You're taking very high risk in order to earn very high returns. That is known as speculations. Then let's come to depreciation, which is the section given as 32. Two conditions we need to fulfill, three conditions. One is that you have to be owner of the asset and you should be using that asset for your own business or profession only. That is very much important. And this use must be in the relevant previous year. It is not that you're using it last to last year and you're showing it for taxable purposes in the previous year. So it should be relevant to this. So this is how you find the depreciation, how it is allowed. Opening written down value, you have purchases during the year, you subtract your sales and you find the closing written down value. Now there are certain important block of assets and like building, furniture, plant and machinery, intangible assets. So there is a classification that is given to you on your screen. Let's read them out. For building, we have residential building, we have factory building or any office building, godown, stockyard, borewell, well, wall compound, temple, road, and even temporary erections that are there. And then you have furniture and all appliances connected thereof. Then plant and machinery are machinery, any car, two-wheeler or mobile. And then you have computer, laptop, software. All these, see, rate of depreciation is given alongside. Books which are used by professionals or air pollution control equipments. Intangible assets, you have patent, copyright, trademarks, know-how. All this flat rate is 25%. Now let's talk about income under the head capital gains. So if I talk about capital gains, so profits or gains on the sale of capital asset shall be considered as capital gain. Now let's try and understand what is the meaning of a capital asset. So any income which you're deriving from any movable or immovable asset and it is taxable under this capital gains tax, under Income Tax Act of 1961 is your capital asset. See, for example, we also talk about our capital markets. The capital markets are what? Where we have our shares, we have our debentures, we have our bonds, all these things form a part of capital markets. Here capital asset is, but those are financial assets. These are capital assets, whether they are movable or immovable. Now let's talk about the basis of charge. So the profits or gains which are arising from transfer of capital assets, which you are arising during the previous year, this is going to be chargeable under the head capital gains. But then you have certain conditions which you need to fulfill. one condition here is that it should be a capital asset for sure. Then you should also be involved in transfer of this capital asset. And this transfer should happen in the previous year and should be profits or gains that are happening. And unless all these four conditions are fulfilled, you cannot have this charged as a basis of capital gains. So this is absolutely very important. Then capital asset, I told you already, movable, immovable. So you have movable machinery, furniture, fixtures, building, plant, land, all these things. Then you have goodwill, leasehold, tenancy, patents, all these are intangible assets or they're immovable. Intangible. Other things are immovable. For example, your piece of land is immovable, but your plant, machinery, these are movable. Then you have capital assets include property of any kind, fixed or circulating, movable, immovable, tangible, and intangible. So as I told you, tangible would be your land, building, and all these things. And intangible would be your patent, copyright, your trademark. So the definition of capital assets is also given in front of you. Almost everything that you're owning for your use for personal purposes or investment is your capital asset. Now, there are two different broad categories that we've made in the capital assets. One is your short-term capital assets, and the other one is your long-term capital assets. So if we talk about short-term capital assets, so you should be holding your short-term capital assets for a period of not less than 36 months in order to qualify for a short-term capital asset. It will qualify for a long-term capital asset if you are holding it for more than 36 months, that is 3 years. There are certain exceptions that we need to look at in these capital assets. One is that, excuse me, any stock in trade, consumable stores, raw materials which are held for the purpose of business or profession. Other thing is movable property of assessee, including the apparel that you're wearing, that you cannot include in the capital asset of the business. And even the car or appliance or refrigerator that is there in your home, which you're using for personal purposes, that will not form a part of capital asset of your business. Then any agricultural piece of land which is there in the rural India, that is also not a capital asset for you. Then you have certain deposits that are given to you, gold bonds issued when they were issued, all these things. Then how do you find out your STCG? Let me tell you what is STCG. STCG is your short-term capital gains for the capital assets that you're holding for not less than 36 months, that is 3 years. So any full value consideration that you have, less the cost of acquisition, the cost or the book value at which you acquired it, any cost of improvement that you have incurred on it. For example, you might have gone for repairs or something like that. Then you have your short-term capital gains, and then you claim exemptions under section 52B, 54D, and 54G and arrive at your net short-term capital gains. Then let's come to long-term capital gains tax. For this, you have equity shares which you're holding more than 1 year, taxed at 10% flat, and you don't get indexation benefits. So this is about your equity mutual funds, debt mutual funds, real estate, and gold or precious metals. Going beyond this, we have certain meanings that I have written up here. You can quickly go through them. Full value consideration is what the transferor or the entitled to receive as consideration. So full value means whatever you're entitled to receive as consideration for sale of your property. So if you're selling something, whatever you're getting is known as your full value consideration. It can be in cash or it can also be in kind. Then we have cost of acquisition. This is the price which assessee has to pay or amount which the assessee has incurred for acquiring. So this is from the point of view of the person who's purchasing, who's acquiring. Okay. Cost of improvement is that capital expenditure incurred by assessee in making any addition or improvement. That is cost of improvement. Then capital gains exemption from tax. So here you have certain things that are written. Let's go one by one. So section 54 talks about capital gains arising from transfer of residential house. 54B talks about capital gains arising from transfer of land used for agricultural purposes. Then we have acquisition of land building forming part of industrial undertaking. And then 54 EC will talk about gains not to be charged on investment in certain bonds. So you have exemption there. Then there are transfer of certain listed companies, they are not to be charged. Then Again, gains on transfer of a long-term capital asset. Then you have gains in case of shifting of industrial undertaking. And then there are gains on transfer of assets in case of shifting of industrial undertaking from urban area to any specific economic zone. Okay, any special economic zone, basically. Then last, we are going to talk about income from other sources. So income from other sources, the basis of charge here is that an income which shall be chargeable to income tax under the head income from other sources. One is that it should not be charged under any other head. So we have 5 heads of income as I discussed in the last lecture. Here, if the income is not coming under those four heads, then it is going to come under this head. So such income, it is not exempt under provisions of income tax. You have to report this income. And this income is not chargeable to tax under any first 4 heads. Like I talked about salary, house property, profit gains of business profession, and capital gains. And then you have income from other sources is therefore a residuary head of income. Why we call it a residuary head of income is because after putting income in different heads, whatever is left of us, we are going to put it under this head. So income which is generally taxable under section 56(1) is income from subletting house property by a tenant, then interest on bank deposits, on loans, then rent that you're receiving from a vacant piece of plot or land, then agricultural income. If your land is situated outside of India, insurance commission, then income from undisclosed sources, interest received on delayed refund of income tax. For example, you filed ITR, but you didn't get your refund, and it has happened that 3-4 months have passed by, so you're going to get the interest. The income tax department is going to pay you the interest on that. Reason being, it is a delay from their side. Remuneration received by a person from a person other than his employer, income from royalty, then director sitting fee for attending board meetings. Then there are specific incomes which are chargeable under the head income from other sources. Let's talk about them. One is the dividend, except dividend received from domestic companies. For example, you're receiving any dividend outside of India, then it is going to be coming under other sources. Okay. Because dividend income which you're receiving from domestic companies in case of business and profession, that is exempt from tax. But if you're receiving it outside of India, then you have to pay tax on that. Then you have winning from lotteries, crossword puzzles, race, including horse races, then card games and other games of any sort, gambling, betting, any form or nature whatsoever that you are going to include here. Then any sum that you are receiving by the SSC from his employees as contribution to any PF superannuation fund. So here it says that from your, if you are the employer or you have your own business and your employees are paying you some sum, then that sum has to be taxed under some head. So it will come under income from other sources. Income from interest on securities provided it is not taxable under PGBP. So if you're getting interest on securities and you've not put it under PGBP, then you're going to put it here because you want to avoid double taxation. Then you have income from letting out of property, plant or furniture provided it is not taxable under PGBP. So PGBP again, you need to see if you are letting it out, for example, you're getting rent from that, then in that case, whatever you're receiving, you can put it under the head other sources. Then apart from that, you have income from any sum that you're receiving under a Keyman insurance policy, including sum allocated by way of bonus on such policy. So you need to understand that it is not taxable under PGBP. So if it is not taxable under PGBP and salaries, then you're going to put it under income from other sources. Then you have receipt of any sum of money and for immovable property or any movable property, then without any consideration, if you're receiving that money, then you're going to put it under other sources. Then comes receipt of shares of a company. If you're getting the shares without consideration or without giving in at less amount of consideration, then that will also be income from other sources. Now let's talk about the methods of accounting for income from other sources. Now there are certain methods that are there, as I told you earlier and discussed about the cash and accrual basis of accounting. So the first here is if mercantile system is regularly employed by the assessee, the income is taxable on accrual basis. See, in our country, India, we call the accrual basis of accounting as mercantile system, and this is the most commonly used system in our country. And if cash system is regularly employed by the assessee, income is taxable on receipt basis as it is coming. Okay. And if the assessing officer is not satisfied about the correctness or completeness of the accounts of the assessee, or where the method of accounting have not been regularly followed by the assessee, then the assessing officer may make best judgment after giving opportunity of being heard to the assessee. So if you are not classifying your income well, or if you're not providing complete, accurate information to the assessing officer, then in that case, you have to be produced before that assessment officer, and then you will be given sufficient opportunity in order to prove yourself, in order to prove your case. And once it is done, you will be done with the income from other sources. Then you have certain other things like winnings that you're doing and any opportunities you got, for example, crosswords, puzzles, race, including horses, etc. For example, you might have heard of Kaun Banega Crorepati. You go for this particular game, which is hosted by Amitabh Bachchan, and you play this game and you earn large sums of money. For example, you're the winner, you get, 7 crore sum of money. So in that case, where will that income come? That income is going to go under other sources because you actually earned it in the Kaun Banega Crorepati, right? So winning from lotteries, word puzzles, or races, including horse races, card games, gambling, betting, all will be a part of this. So how it is going to be taxable? Let's have a look at it. From winning from lotteries, if price exceeds rupees 10,000. For crossword puzzles, you have if it is exceeding 10,000. For horse races, if it is more than 5,000. Card games, it is exceeding 10,000, and the prescribed rates are given to you. Okay, that is how you will make the calculation. Now, income that you need to include in transfer of money and or property. So if individual or Hindu undivided family is receiving on or after 1st of October 2009 in any previous year from any person or persons a sum of money or property which falls under any of these four categories, then it is chargeable to income under the head income from other sources. So like I said in the very first slide, if it is not coming under all the four sources that we studied, then you're going to put it here in income from other sources. Now let's talk about the nature of gift, the condition for taxability, whether single or all receipts are considered for limit, and the value that is chargeable to tax. So if you're given any sum of money, what is the condition is given in front of you, all the receipts are going to be taken and whole of the aggregate value will be taken. In case of immovable property also it is given, movable property also it is given, and for consideration which is less than FMV. Just a minute. Yes. So any movable property for consideration which is less than FMV. Let me explain to you what is FMV. FMV means fair market value. So the tax authorities, they are going to have a look at the fair market value of that nature of gift that you are given. And accordingly, they are going to make an assessment of the taxes. Now we are going to talk about meaning of property and relatives. Okay. So here you have property. Meaning of property is it will include any movable property, being land or building, since you cannot move it, shares and security, jewelry, drawings, paintings, and sculptures, or any work of art or bullion. But the year is also given here. Relative would be spouse, brother, sister, or brother, sister of spouse, brother, sister of your parents, any, ascendant and descendant. So all these people will form a part of your relative. Even the spouse of the person that you're referring here will be a part of your relative. So where will this section not actually apply is that when the gift of money or property shall not be taxable would be if you're receiving it from relatives on the occasion of your marriage. If you're getting it, we are not taxing it under will or by way of inheritance. For example, will is created by your parents that after me, this person is going to get the property, then you will get the property, which is not taxable because otherwise it is going to be taken as a sale or purchase of property. In contemplation of death of the pair, if it is contemplated, then from any local authority or trust institution which is registered. Then deduction of expenses from dividend income, interest on securities. So here we have any reasonable sum paid by way of commission or remuneration to a banker or any other person for the purpose of realizing the dividend or interest. That is going to be taken into account. Then interest on money is borrowed for purchasing the shares or debentures. That will also form a part of this. And any other expenditure that you are incurring, not being expenditure of a capital nature, means it is revenue nature item, expended wholly and exclusively for the purpose of earning dividend and interest will also come under this head. So you're going to gross up all the interest on securities. You will get the gross interest, which is net interest into 100 by 100 minus rate of TDS. So next you have deduction of expenses from income from letting out. So you can just go through these points: repairs of building, insurance premium, repairs of machinery, plant, insurance, depreciation, then any other expenditure. Then for deduction from family pension, it is received by any legal heir of the deceased employee. So family pension means regular monthly payment that you are receiving by the employer to the legal heir of the deceased employee. So after death of the individual, anybody who's getting the pension, that will be the person in whose hand it is going to be taxable. And after death of the employee, if there is any family pension received by the legal heir of the deceased, it will be deemed the income of the legal heir and will be taxable under the income from other sources. Okay. And on such sources, standard deduction is given to you, which is 1/3 of this pension of 15,000. You're going to take 1/3. You're going to calculate 1/3. You're going to find out 15,000. Whichever is the lesser one, you're going to take up that. So amongst those two, you have to take the less one. So there are certain basic conditions for allowing any other expenditure. So expenditure should be incurred fully and exclusively for the purpose of earning such income. It should not be a nature of capital expenditure and personal expenditure. It should be incurred in the previous year only and not any prior or subsequent years. And amount deductible in computing is given to you: the personal expenses, the interest, salaries, expenditures, income tax, wealth tax, or any expenditures in connection with the winning from lotteries, gambling games, including horse races, etc. is given. I'm not going to do this question. It's going to get a little tough for you. Yeah, so that's it from my side. Okay, so let me see who all are attending the meeting. First, I'll just quickly share the link for the quiz that you all are supposed to fill. This is a compulsion for you to get attendance and marks. Your marks are going to be, we are going to have a look at your marks, and I'm also going to take your attendance. Students, are you able to hear me? Just quickly fill out this.
Ma'am, do we have to do this now or after the class?
You want to do this after the class? You can do it after the class. I'll take your attendance then in that case. Okay. I'll quickly take your attendance before
Okay,
the
ma'am.
session expires. I'll share this in your group also. That is also another thing that we can do.
Yes, ma'am. Thank
I'll quickly take your attendance then. Also, have you all filled out the feedback form?
Yes, ma'am.
Okay. So you have to fill the feedback form as well as the quiz for both the days. Okay. I'll quickly take a screenshot of your attendance.